Hello everyone, welcome to another video. We are just going to go over a few things that's happened so far this week. It is technically Friday, it is 12:12 a.m. November 3rd. We got earnings to go over, so right off the bat, let's go over our friend Allied, which had, in my opinion, an amazing quarter result. It's up pretty decently over 5 days. We went from about 1583 to a basically 5-day high of 1757, almost a $2 gain a share in like 4 days. It's insane. Now, few really important stuff got told here. Right off the bat, AFFO was actually up, which is insane. Now, because of this resulted in FFO and AFFO payout ratios in the third quarter of 75%, 82.6. That's a decrease from the last quarter. FFO was down for the last quarter. AFFO units were up 3.6. Sim asset NOI from the rental properties were up 0.9%. Leasing activities, they did a significant amount of leasing. 306 lease tours, that's way up. Despite the seasonal slowing leasing activity in the summer month, occupancy in leased area was 86.8. That is a drop. 87.6, that is also a drop, but not significantly. It's just a small, I think, like 0.4 drop. It's really nothing crazy to go home about. Average rent did actually, I think it went up again. Either way, it's up 10%. Average on average base rent. They renewed a significant amount. They also leased some more too. They did some of the First Nation Council allocation plan. They basically broke it all down of what they're doing. Now, because of this, there's a special dividend that will be 47 cents a share, with the record date being December 31st. Basically, that's a placeholder date. There's a good chance it could actually be that date, but there's also a chance, they could have moved it up and been like, oh, surprise, guys, November. Something around those lines there. So, nothing really crazy. And then it basically goes down with this: as a public real estate, we have to do X, Y, Z. But overall, I'm not mad. I was expecting like nothing, and they actually came out and they blew me away with a rise in AFFO. They announced they are increasing the dividend. They didn't give us a percentage yet. Indebtedness is kind of flat. However, this guy right here, net debt as a multiple of annualized adjusted EBITDA went from 9.6 to 10, and then dropped down again, and then dropped down this quarter to 7.9, which is, in my opinion, it's amazing how crazy it is. It's basically 1.7 years they just wiped out, which is crazy to think of. And it goes EBITDA interest coverage ratio, including interest capitalized and stuff, basically just dropped 0.4, but still I'm very happy with it. So yeah, that's basically Allied. I'm overall very happy with it. I think it 100% deserves this. It finally deserves a win, guys. The earnings came out, honestly, like nothing really happened. Like, yeah, we went from about 1580, jumped up to 16, kind of float here for a few days, and then just rebounded up to 16, rebounded to 17, and then now we're just slightly below where we started a month ago of 1733. Like, we've basically gone like $2 low and shot up almost $2 in the same time frame, so I'm happy with it. We had PMZ, Primaris REIT, also announced their report today, which they are increasing distribution, which is awesome to see. Sorry guys, I'm going to try to extend it a bit just so we can all see it. I love the CEO of this, by the way, so I'm extremely biased. So overall, 3.1% occupancy grew. I believe it was like 86, 87, so it finally grew to 91 and 92. Weighted average spread on renewing access across this many thing, which is really nice. Funds from operation increased 2.4%. 3.5 billion asset, 49.4 FFO payout ratio. Their goal was to get that, I believe, between 45 and 50, so they actually accomplished it, surprisingly. $279 million of liquidity. It is down about 80,000, or sorry, I want like 80 million, which is kind of, I'm trying to figure out why, and I just can't. 3 billion of unencumbered asset. The NAV did drop about $1. That's kind of just expected. So as it says here, approved an increase in 2024 of 2.4% from 82 cents to 84. To summarize this for all of us that care about the monthly dividend, it's going from 683 cents. Sorry, 0.683 to basically 7 cents. So you're basically getting about a 0.0017 increase a month. It's not crazy, but what can you do? So again, they completed the acquisition of Conestoga Mall in Waterloo, Ontario, adding a significant amount of... Got this. Total NCIB, they have been heavily buying back shares. This has now dropped again, and now it's 7.3 million shares they've purchased since it became active. It basically goes over. We put a lot of emphasis on Primaris' differentiation financial model and disclosure, and when we speak to the investment community, this goes on and on. Increase and strong 2024 guidance introduced this quarter, both reflect the continued strength and momentum we are seeing in the portfolio. Closed in the third quarter, adding a highly attractive property to our portfolio. This asset and transaction exemplifies the type of properties our acquisition strategy is focused on and has acted as a positive catalyst in advancing the REIT's portfolio of acquisition, discussion, and negotiation. Again, you guys can see it right there. They actually accomplished it. Now, talking to the CEO about FFO and AFFO, if you don't know, the CEO is actually a ex-REIT analyst. And basically, AFFO depends on a company-to-company basis. Basically, it's different for every company. So going off FFFO, this is a quote from him, FFFO is just like the general standard, and that's what you should go off of in his opinion. I disagree, but, you know, everyone to themselves. Total debt and stuff, like, again, they're doing just fine across the board. Going down here, you guys can see they basically updated it to, like, no change because... They've already upgraded what they were supposed to. So they literally upgraded to, like, we're not changing crap, but they are changing. Straight line in rent revenue is being increased, which is nice. Cash NOI is being increased slightly on the lower end, but not too much. Same property, nothing changed. Impairment of right to use asset, 22 million impairment of right to use. Portion that impacts cash flow is only 0.4 million, and the 1.8 million is non-cash. Whatever. Anticipated to be on the top end of the quarter, so operating capital expenditures, again, they're spending a significant amount of money on it. Development, as they say, progress on Northland redevelopment project accelerated further. FFO per basis, no guidance, so $1.56 to $1.58 per unit, fully diluted. Net of the negative impact of the office sublease of approximately basically 2 cents. So, aka someone didn't renew it and they're getting hammered from it. For the full year, basically goes on. So they're expecting a pretty decent increase in rent and then all this different stuff. And then North Village and Devonshire Mall are both getting renovated, which is going to cost 30 to 40 million. Once this renovation, everything is done, we should see them slowly come back to normal. And comparing it to last year, surprise, surprise, guess what happened? Everything is basically up. Weighted average net rent is up 67 cents a share. Sorry, per square foot, my bad. Total assets is up, obviously, because they acquired a mall. So, you know, they acquire one mall, they're going to grow pretty significantly. Net income, loss per share. So they went from a loss to an actual gain, which is nice. FFO payout ratio is slightly above what it was before. And then, you know, AFFO payout ratio is like 7.6% higher, which if we go down, it should show up in here. I want to show you guys it. It is... So one, distribution on preferred went up a pretty decent amount, as well as property under reconstruction... oh, where was it? There was a thing in here. Straight line rent is slightly down. Recoverable and non recoverable costs. Surprise, surprise, that basically doubled. Tenant allowances, surprise, surprise, is still up a decent amount. It's up basically 0.003 per share. Still does kick at Primaris down a little bit. And again, with that 3 cents, it would be much closer to where it was last year, but I'm not too worried about it. I see it just as a CEO explained. Seasonality coming into it because guess what? It's the holiday season. Stores and stuff all over are using a little bit of that extra money to make the store look nice, you know, and all that different stuff, and getting allowances from it. So that's basically where we stand. We have a few more coming up next month. We have middle of the month. We have Flagship. We already had Agree Realty. It was okay. It's just Agree. There's nothing too insane about it. Realty Income is coming up next week. Main Street had it. Everything was literally in line. The payout ratio did increase a little bit, excluding the special dividend, just on a per share basis. They made $1.04 of DNII, distributed net investment income, basically on their per share coming up of, you know, 0.24, let's say, times 3. So basically it's 0.702 is what they're going to be paying us, and they made $1.04, which is 69.23% payout ratio. This is assuming it stays the same next year when they do the dividend hike, by the way. The hike's coming January. A special dividend is getting paid out, I believe, I think November. I could be very wrong, though. You got to go double check that. Actually, we'll do that right now. We can just, I believe they actually have it on Yahoo. Thank God. Yeah, there we go. They actually announced it before. Sorry, they announced it in here. So yeah, so they increased monthly dividend, a supplemental dividend payable December. So basically goes over this, another 2% div hike, or 6.7% compared to the first quarter of the year, which is super nice. Supplemental dividend of $2.75, so exactly the same as last time, which again is super nice, and it breaks it all down here. So sorry, it's in December. They're paying you basically right after Christmas. Going up here, you have your dividend declaration and basically what it will be. And yeah, the Q3 is just in line. It was $1.04, so slightly below, but still beat expectation of $1. And honestly, that's pretty much it. I'm overall extremely happy with it, but everyone has their own thing. Decisive, we're waiting on. I think that's next week. I could be off. Primaris, we had it. Canadian Net is the literal end of the month. It's the 21st or 22nd. And that's when we get basically our dividend hike news, which again, the average is 9.7. They hike it quite a lot. Last year, though, was 1.5%. They spent a good chunk of money in I think it was Q2 or Q3, whatever it is for them. The last quarter, basically, of paying, like, I think it was something stupid, like $80,000 on just upgrading property to hopefully increase the rent there. Allied, we went over it. Great. Beat my expectations massively, and TGIF is just literally TGIF. Nothing has changed. Okay, so if you're here just for the news on the 3 of them, you're good to go, because we're now just gonna try to figure out what the hell to do with the portfolio, which will be the next video. Basically, it's just me walking around trying to figure out what to do, especially with the market rallying hard, bro. In, like, I want to show you guys, this thing actually loads. Please don't lag. Oh shit, it's gonna lag. Basically, like, the portfolio's up 5% in just a few days, which is just insane if you think about it. But, you know, in this, there's still deals to be had out there. You know, PDI is still looking attractive. Goff is still looking attractive. All this different stuff. And it's really just trying to pick out what's the best and just rolling with it and seeing what we get. But yeah, guys, thank you for watching. I'll see y'all next time.